Hey there, J3 here and welcome back. In this video, you're going to learn how to protect yourself from unbearable expenses. And the way to do that is by learning all about insurance.
The basic principle of insurance is very simple. Number one, bad things can happen at any given time. Number two, no one is sure on who exactly will be affected. Number three, people put together a disaster fund so that when someone is affected, they can use the disaster fund. Number four, it is society's way of sharing the burden of risk so that everyone can live without being paranoid of life's big what-ifs. From this perspective, we can say that insurance products are actually designed for the common good. Recall the time of Typhoon Ondoy when many parts of the country were flooded. As a nation, those who weren't affected pooled their resources together to help out those who were in need. It was a nationwide effort to help others recover from a disaster. At the very core of it, insurance works in the same way. It is a social good that helps those who have been unlucky in life. Only now, insurance has been given a bad name due to the very aggressive way it has been sold to people. Additionally, because of the huge corporations behind it, we no longer see the good that it is doing for society. But it is still there. Insurance is a great invention of man that allows heavy burdens to be shared with everyone, making it bearable. So allow me to share with you 3 misconceptions about insurance, whether it's life insurance, car insurance, home insurance, and so on. Myth number 1, insurance is an investment. What is the truth? Insurance is protection. No matter what the sales agent tells you, insurance is not an investment. It is never an investment because you only get money when you are in trouble. And the money you receive is there for you to recover, but not so that you can become rich. If you insure, for example, a house that is worth 1 million, in the event that it gets burned down and totally destroyed, the insurance company will give you 1 million pesos for you to rebuild the house. And it is not by any means a reward for you to get ahead. So if you're insured for 3 million and you unexpectedly die, then your beneficiaries are given 3 million pesos so that they would be able to recover from the loss of your support. Nothing more, nothing less. Now, going to investments. Investments are there to make you wealthier. Insurance, what insurance does is that it prevents you from becoming poorer. See the difference? To illustrate this concept, let's say that this line represents your regular day-to-day expenses. Now, without any insurance, this is what can happen to your expenses when you get into an accident. The expenses shoot up. And if you can't fund that, you'll end up having to borrow money, which can bring you back down to the stage of the quicksand. Now, here's what will happen if you do have insurance. This again is your original day-to-day expenses, but that is going to increase a bit because you'll be paying for the insurance coverage in the event that something happens. So when something indeed happens, expenses will still shoot up. But the good thing is that someone else will be paying for it and you get to maintain your predictable level of expenses. So the key thing to remember here is that insurance won't make you rich. It doesn't make you rich. It only prevents you from becoming poor. Insurance is not an investment. It is merely protection. Myth number 2 is that everyone needs insurance. What's the truth? The insurance you get should be in line with the risks you face. Since insurance agents work on a commission basis, some of them would resort to saying absolutely anything just to get you to buy more insurance, even if you don't need it. Now, before I tell you when you really need to have insurance, let's first talk about the kinds of insurance out there. At the broadest sense, in the most general sense, there are just 3 kinds of insurance you should know about. There's life insurance, in which you receive money in the event of death or when you're severely injured. Then there's health insurance, which would cover for your hospitalization expenses. Then there's non-life insurance, which are the ones you use for your car, your home, your business, and so on. So first, let's go more into non-life insurance because that's the simplest one among the 3. Non-life insurance is used to cover the things that you own or the things that you use. The most common ones are for your house and for your car and motorcycle. The basic thing to know about non-life insurance is that the maximum coverage for any product you cover should not exceed its fair market value. If your car is worth 1 million, then the maximum coverage on it should be 1 million. If you insure it for 2 million pesos, you'll still get 1 million. When the car has been used for several years and the value has decreased, then the insurance coverage is also reduced. You cannot make money from insurance. It is unethical. Now, a couple of things that can make insurance a little bit more complicated are what's called the riders. This is where you can specify the additional perils or simply dangers that you'd like to protect your property from. For instance, there is what you call an Acts of God rider, which covers you for flood damages. There's also a rider for falling aircraft parts. And the reason we have these riders is because different people are exposed to different kinds of risks. That's why you have insurance riders. So, of course, you get the riders which you are vulnerable to. For the other riders, well, you can learn about them from your insurance agent. So, how do you know whether you need non-life insurance? Well, that's pretty basic. If you have a car, then you must have car insurance. If you have a home, you must have a property insurance. As for the riders, get what gives you peace of mind. After all, that is the purpose of insurance, to give you peace of mind. So that's it for non-life insurance. Let's move on to the next kind, which is health insurance. Health insurance mainly covers for hospitalization and medical expenses. There are two kinds of service providers out there that you should be aware of when it comes to this area. The first are the health maintenance organizations, or HMOs. These are MaxiCare, Medicard, Caritas, etc. This is what you'll rely on for the basic checkups and regular or normal illnesses. The regular structure for this is that you'll pay a membership fee, and the participating hospitals or clinics will cover your medical and health expenses up to a certain limit.
For example, here is one plan from a reputable HMO for a 30-year-old individual based on their 2013 prices.
For 17,000 pesos, the HMO will provide him a maximum of 100,000 in benefits, whether that's in hospitalization fees, therapy, emergency care, doctor consultations, checkup, and other treatments. Now, the 100,000 is an acceptable limit for simple surgeries, illnesses, and diseases. But for the complex illnesses like cancer, heart attack, and stroke, the treatments would reach up to the millions of pesos. In that case, HMOs wouldn't be of much help. Here, we'll have to rely on life insurance with a critical illness rider. They won't cover you for checkups and normal diseases, but you'll get a large portion of the policy's amount when you get the life-changing illnesses. Now, both kinds of services are useful, but whether you need it or not depends on several factors, such as your lifestyle, age, if you have dependents, and what your employer already provides you with. With this, allow me to provide you with a guideline to know what kind of benefits and how much coverage you should get. Ask the question, will buying this service give me the peace of mind when it comes to my health needs? Different people will have different answers to this one.
For my case, when I was still a single 25-year-old who was self-employed, this was way back 2012, I did not have any employer or company giving me HMO benefits. Therefore, to secure my basic healthcare, I'd have to get an HMO on my own.
Frankly though, what worries me the most at this stage in my life are the big illnesses like cancer, heart attack, and stroke. So to me, getting an HMO won't give me peace of mind because that's not enough coverage in case I get those diseases. I'd rather go with a life insurance with a critical illness rider, since that is what would give me peace of mind. As for the regular sicknesses and ailments, well, I'd rather spend my money on good vitamins rather than paying it to an HMO. I'm in the stage of my life where I should be preventing diseases rather than being prepared to cure it.
Again, this was my situation way back 2012, 2013. In 2017, I'm already married and we have one baby girl. So me and my wife would already have different life insurance needs because we want to make sure that whatever happens to us, we would have enough funds for our child's future education. Now, our case would be very different from a 45-year-old family guy with 3 children.
He might be more concerned with the overall health of his family with the regular checkups for him and his children. For him, the HMO and the life insurance, both of them will be requirements for him to have peace of mind. So both products will be needed. That's why it's important to ask the question, what products or services will give you peace of mind and a sense of security? Remember, peace of mind is the purpose of your money at this stage. So stick to that purpose. With that, let's go to the last kind of insurance, which is the simplest one, but has become so complicated because of its variants. This third type of insurance is called life insurance. And at its core, the purpose of life insurance is so that in the case of untimely death, you will be able to take care of the people you leave behind. So the most basic form of life insurance works this way. You pay a small amount called the insurance premium. This premium will cover you for, let's say, 1 year. Now, in the event of untimely death, during the year you are covered, you will get the full amount of your policy. This is what you call term insurance, and it is the most basic kind of insurance, plus it is also the cheapest kind of insurance out there. The other forms of insurance were invented for the simple reason that people didn't like buying life insurance because they didn't get to avail of the benefits. It seems like a weird product since if you get to use it, it means you're dead. But if you don't end up dead, you don't get the benefits. Insurance is really weird in that way. This is why they invented different kinds of insurance products that had a form of savings or investing components. These are your whole life with cash values and many other forms of insurance to choose from. The main selling point of these kinds of insurance was they were easier to sell because they had investing and saving parts. Now they could sell insurance as an investment and that the buyer could get the benefits while he or she was still alive. If you're thinking that these kinds of products are good, well, it's actually much more expensive. You get less coverage per peso you pay for because of the savings and investments component. If ever you encounter these forms of insurance, always compare it with the term insurance. That way, you'll find out how expensive they really are. So for this section, I'll just focus on the term insurance since the rest are just more expensive modifications of this kind. Recall the original purpose of life insurance. In the case of untimely death, it is how you're going to take care of the people you leave behind. If you have children, you'll still have to provide for them until they finish college or until they're able to support themselves. If you have parents who are financially dependent on you, you will have to consider how they can survive without you. If you have people dependent on you, then you need life insurance. But if you don't have people who are dependent on you, then you don't need life insurance yet. So let me tell you about 3 very bad lies that sales agents tell you so that you will buy more insurance from them or to get you to unnecessarily buy insurance. Lie number 1, insurance is a gift to those you leave behind. First of all, insurance was built to support those you leave behind. It's not supposed to be a gift. No one is supposed to be celebrating. If you want to give the people you leave behind a gift, then how about just buy the gifts now and enjoy it with them now? Don't increase your insurance coverage just because you'll want them to receive more when you die. Get only what you need and the rest, spend it in more meaningful things. Lie number 2, insurance is an investment. Again, originally, insurance was not meant to be an investment. Its primary purpose is financial protection for those who you will leave behind. If you want to make an investment, then get an investment. Later, we'll talk about the different investments that you can get into. Don't mix it with insurance because you will end up paying more for less the benefits. Lie number 3, get insurance while you're still young so the premiums would be cheaper. Okay? This may actually sound good, but it's not. Getting insurance while you're still young and don't need it yet would be like buying a new pair of shoes that you don't need just because it's 50% off. If you don't need insurance yet, meaning you don't have any dependents yet, don't buy it yet because that would be a complete waste of money. If you have extra money and you don't need insurance, make an investment instead. Don't waste your money on things that you don't need, even if they are cheap. When it comes to life insurance, financial planners and educators like Robert Kiyosaki or Susie Orman have always said, buy term insurance and invest the rest. The reason why that has been said over and over and over again is because it is the most economical way to the path to wealth. Anyone who tries to convince you otherwise is most likely an insurance agent. This brings us to the third myth. Myth number 3 is, stay away from insurance agents. The truth is, stay away from some insurance agents. There are bad and good insurance agents out there. The good ones are those that put your needs ahead over theirs. The good ones are those that really assess your needs and determine if you really need insurance and how much. They are the ones that would walk you through the long process of identifying your needs, compute the amount of coverage you need to have, and most importantly, explain to you why those are the numbers. Bad insurance agents are those that show you the products even before they ask you questions. It means that these agents are the one who would push products on you even if you don't need it. They are also the ones who would use shortcuts in determining how much coverage you need, just so you buy more insurance from them. The key thing that separates good agents from bad agents is the process in selling you the insurance. It's not about their personality, whether your kids go to the same school or you like the same movies. It's all about the process. Number 1, understand your needs. Number 2, assess if you need the insurance and how much. Number 3, explain to you how everything works. So, those are the 3 key things that you should look for. Be very attentive to the process. So here are the 3 things to remember when dealing with an insurance agent. Number 1, say no when there are signs that he's a bad agent. By now, I think you already know the difference between a bad agent and a good one. So, when you hear or see a bad agent, don't be afraid to say no and stop returning their calls, stop returning their messages, and stop meeting them. That's okay. It's your money. You do what you want with it. Number 2, ask questions, ask anything you don't understand. Don't be afraid of looking dumb or asking the wrong questions, since that's your hard-earned money. You have to fight for it. Number 3, talk with different agents of different companies. It is only by seeking good agents that you'll be able to find them. Don't wait for them to call you up and contact you. You can directly contact the offices of the insurance providers so you stay in control of your financial matters. Now, there is a lot more to learn about insurance, but we have already covered the most important parts. Just remember that the purpose of insurance is to cover for unbearable expenses. The goal of insurance is not to make you rich, but to prevent you from getting poor. Insurance is not an investment, it is not a gift, it is not needed by everybody. Insurance is protection for when things don't go as planned. Insurance is your peace of mind. When getting insurance, just be guided by the purpose. Stick with the purpose and you'll be sure to make the right financial decisions.
And that's it for goal number 2, securing unbearable expenses with insurance. In the next video, we'll be moving into the area of investments. See you there.